In the last video, we walked through the very simplest case, a business that's got some one-time startup costs and then that grows over the course of a year. But what if you've got a longer startup period? Let's say that you're building a restaurant or you've got to develop a product, and so you may have 3 months or 6 months of startup costs before you're actually able to begin marketing and selling your product. What happens then? Well, why don't we create a brand new Strat file and walk through that. So you'll need to move up here to Strat Files, which is just off your screen, and click on the New button. StratPad will take a moment and create a brand new Strat file. And then let's call this Acme Technology Startup. And let's jump, we'll skip over discussion and strategy statement and jump right into projects. And of course, there's always a first project which is called Untitled, and we're just going to call this one Startup Phase. So you can see I'm using the word phase just to suggest that there are multiple time periods that can occur. In this case, one will occur right after the other. I'll skip over the person responsible. Let's set the start date for the 1st of January, and let's set the end date for 3 months later on the 31st of March. Now there's going to be no revenues for the first 3 months, and therefore there'll be no cost of goods sold. There's going to be some research and development expenses, and so what you'll need to know is to total up the number of people and all the other R&D expenses you'll need. So let's say we've got 2 people at $5,000 a month for, so that's $10,000. And let's say you've got your own, you're taking $5,000 a month, and we've got some rent in there. So let's say that this is $6,000, and we've got no sales and marketing expense, and these numbers aren't going to grow. And so, great, you've just created a 3-month project or phase that shows expenses only. And you can go and check to see what this looks like in the income statement or in any of the simple projections. And you can see we have expenses, and therefore we have losses for the first 3 months, which is perfectly normal for a startup. Let's go right back to write your plan. Now what we want to do is add a second project, and just click on the plus sign here. Now we've got a second untitled project, and we're going to call this Initial Marketing. And again, skipping over the person responsible, and let's go to the start date, and we're going to start the day after the product is ready. So April 1st, and we're going to go to, let's say, September 30th. So the initial marketing phase will take 6 months. Now, here's where we don't have any more R&D expenses, or maybe we do. Maybe during this phase you're going to continue to develop the product and develop version 2. And if so, then you'll need to put those 2 people in here again. Of course, you've still got rent and your own salary. And then under sales and marketing expenses, perhaps you have a new person, or you're certainly going to spend money on campaigns. And let's say you're going to spend $7,000 a month on those campaigns, and that will initiate some revenues. And let's say in the first month it's $10,000, and then you expect over the course of the next 6 months that you're going to have significant uptake in your product sales. So let's say 25% growth. And if you've got matching cost of goods sold, for example, if you are a technology company, maybe you've got 10% cost of goods sold, this will also go up. This will also go up to match the growth in revenues. All right, fair enough. Now you can go back to your financial reports, and you can see that these 2 phases show up one after the other, and there's your revenue growing at 25% per month. There's your expenses, and you can see that you're actually starting to post a small profit in this particular month. By the way, what you can do here very quickly is go into your statement of cash flows, and your statement of cash flows will show you your losses accumulating, and then when you start to achieve a profit in September and October, your losses start to drop. You'll need at least $74,000 to get from opening day to the end of the 9th month. As you're doing this, don't forget that you've got other reports, and you can go and take a look at them and see how the work you're doing is affecting those reports.